everybody. We have a little dollar weakness today. Both euro and pound are up. Yen is down. Dollar index, which we turned negative since it couldn't get through 94.20, heading down. If we're going to see a reversal, it better dig its heels in soon. Looking over at, okay, Steve, no problem. Wanted to look at some of the crosses here. So we are getting another rally attempt in euro yen, but it has not yet made a new high. Looking at the RSI, I'd like to see it do exactly that, make a new high. So this would be on my radar screen for potential shorts next week. Guppy far away from making a new high, still possible with a 1 and a 2. Steve will be with us in a little while. And the gold rally has really taken a lot of people by surprise. It's been quiet without a lot of hype and fanfare. But I had someone tweet me and ask, Dale, what would you do with the gold here now? I said, well, you know, I was in here. I said, I can't buy it. Perhaps look for some type of fib retracement to get long. This is a pretty powerful move back to major resistance, done with very little fanfare. If everyone can hear me, give me a Y. Can you hear me, Ziggy, Ray Dalio, Windsor? Euro pound looks heavy, so maybe this was it. I still thought we had a shot for 90, but maybe we're going to just pull back here. Still possible that's going to happen again. Remember, these are holiday markets. 10-year yields coming off a little bit, but yields look pretty good to me, guys. I mean, after this move last week, I think we're getting some type of flag, some type of ABC. Maybe we pull back to previous highs here. I think getting back under 243 on the 10-year, that would be where I would buy yields or short bonds. Everyone with me? Okay, guys, thank you very much. Yen just moving sideways, but looks like a failing rally here. Maybe this was when we had Giuseppe Brazil, 113 was his target. That was down here. Then he's looking for 118. But right now looks vulnerable here. This candle, maybe there's a short at least to 1280. Maybe even back down towards the support level, a bigger C. So to me, the theme is the dollar looks vulnerable. I had a big move in crude, and crude was something we talked about for the last couple of weeks. In fact, I used Steve Volge's charts when I went on TFNN that projected it would come out of this triangle, which we broke out with abandon, with a confirmed high, and still looked like we could trade the 62 plus to complete this off the weekly chart. 62 has been a long bandied about target. So we do have a guest today, and we're going to start about a half an hour early with Tiho Birkin. Looking forward to talking to Tiho. And I'm wondering who else is in the house. Perhaps Stelios is in the house. And
I am here, Dale.
Hey, how are you, buddy?
I'm very good. How are you?
Any news on the currency front that's material in the last 24 hours?
Hey, guys. Good morning.
Hey, man.
By the way, just wanted to tell you that I'm now available as well.
Okay, great.
We haven't had anything really in the last 24 hours since yesterday's webinar. The euro is squeezing a little bit. I have to say, I was, I mean, the DXY chart that I've been posting for a while, I thought that going into year end, the dollar would get a little bit of a bid. It's seasonal as well, and I thought it would rally a little bit and then drop in 2018. It doesn't look like we're getting that. So, but otherwise, there's nothing really happening. The Aussie and the Kiwi are strengthening a little bit. But, you know, the thing that we were discussing in the chat room as well this morning is that all these moves, any moves that happen between Christmas and New Year these days, they're so illiquid. I tend to place very little importance to them, although they can bring some really good entry levels for trades. And the one I was talking about in the chat room this morning was Sterling Kiwi. which actually, hold on, let me very quickly grab the screen and show you. Hold on a second. Show, change presenter. I must be somewhere in here. There I am.
Oh, I'm sorry.
Show my screen. Okay, I got it. So, can you see my screen?
Yes.
Good. The one with the naked ladies, you mean? Yeah, they're beautiful.
No, quick, change screen.
Got you there for a couple of seconds, right?
So, I mean, I don't know, the guys who've been following me and on this webinar and everywhere, I've got this circle there, which was a confluence of resistances for sterling Kiwi. I was long, I got out of it. I didn't go short, I have to admit that. But because I always like to trade this pair on the long side for the medium term. So I got out of my longs there and I said, look, there's probably going to be a pullback. And if it's decent enough, it might bring us down to this support zone where it's actually got now. So I am now looking to go long again if it manages to hit 188, 188.5, so the bottom end of this zone. I would really like to go long there. But my point is that you can get moves in these days which are quite illiquid that might bring some nice entry points for trades, but otherwise I wouldn't put a huge amount of importance to them unless obviously they are accompanied by something fundamental that's changed. So that's my philosophy for these days. So there's a lot of people who ask me, what are you doing these days? My answer usually is nothing. just sitting tight and waiting for a good opportunity.
Or playing poker.
I was playing poker yesterday. Yeah, I got very unlucky. I went all in with pocket jacks, and the other guy had the big blind had pocket queens. So anyway, it happens. But actually, if I want to show this as well before Steve starts with his stuff, this is the Dixie chart that I keep showing, and these arrows I've drawn months ago, and I really thought that it would actually give us this push higher towards 95, 96, and then drop.
It's still possible. It's still possible.
Yeah, and you know how positioning is, and people want to be short the dollar now. So I think if we break 94.20 or something like that, the level, if we break that, we're going to get to 96. I think it's.
My problem is I'm seeing, especially today, which I didn't expect, anything to happen, but I'm seeing a lot of moves. I'm going to start pushing some updates as well because I wanted, to wait a little bit for the US to wake up as well. Because anyhow, these are extremely illiquid days. So, especially when the US is asleep, that becomes even more of a problem these days. I like the moves we're seeing. I mean, things are moving in the direction that I would expect them to move. The cable is breaking above its a bull flag. The euro is resuming higher. The Aussie and the Kiwi are producing one more leg to the upside. The USD NOK is weakening and is almost at critical support. So despite liking the moves I'm seeing and being in the direction I would like them to be, my only trouble is that, it's these days that you can't trust any of the moves you're seeing. And that brings me in quite a tough position because under normal circumstances, this is the point in time that I would start, putting on some more positions. But I want to be prudent, and that really creates a huge dilemma for me because my fingers are itching for some of the pairs. But on the other hand, my logic tells me to rather stay away.
Yeah, no, fair enough. I mean, I agree with that, to be honest. So...
Yeah. By the way, the DXY has already entered. Can I take the screen, Stelio?
Yes, please do.
Okay, there we go. So what I was saying here, the DXY has already entered a very critical support area here. It begins at 93 and goes down to, let's call it 92.60. If we do break below there, I had said many times, weeks ago that as long as we are trapped between 94.20 and 92.60, let's call it the bottom end of the zone here, which is also the 61.8 of the move from the lows to the recent highs that we got in October, in the end of October. As long as it's trapped between there is no short-term trend. I reiterate, no short-term trend, because we have a medium-term trend, which is to the downside. So
the dollar's been at the most you could call it soft. How do you explain the outsized gains in gold with the dollar being soft but not really weak?
Honestly,
Yeah.
I have no decent explanation for it.
Okay.
And another reason is what I showed yesterday. Just look at the treasuries. Usually the yields are inversely correlated, or if you want to say it oppositely, the treasuries are almost perfectly correlated with the moves in the precious metals, especially gold. And we've seen the past few days. I mean, yeah, the treasuries have very slightly rebounded, but gold has been recovering almost non-stop for, let's see how many days is it now. It's since we found the bottom, actually 12th of December. So it's already a couple of weeks that the gold is showing a very strong recovery, while the yields are pointing to the opposite direction. So you know, that's something that is troubling. On the other hand, of course, somebody can say that in general the DXY weakening, of course, is helping the dollar, the gold recover, but it's, the relationship is not always direct. It depends on which kind of factors affect gold every time. So, for example, when you have a flight to safety, you get, and this is generally a warning signal for risk. When you see the dollar and gold strengthen at the same time, usually that's a good signal that we have some risk off coming through the markets. Now, in this case, we obviously have absolutely no risk off coming through the markets. We do have a softening dollar on one hand, but the yields on the other hand are not softening. So the DXY is not and so people should not be confused about that. The DXY is a very heavy euro index. So 58% of the DXY is the euro USD in this sense, which means that you might have the DXY making one move just because the euro USD, for example, is strengthening, and not really depicting the real intentions of the dollar all over the board. So in general, always take the DXY with a pinch of salt. I mean, don't try always to judge general and broad dollar moves only by viewing the DXY. It's not a good index for that, okay? Yeah, I have to tell you that I was surprised by this recovery. And
Steve?
Yeah, yes,
sorry to interrupt. I just want to say also, the dollar has been weakening across the board in 2017, and gold, there were times where the dollar was weakening, gold was doing nothing. So it's kind of catching up a little bit. It's not a one-to-one relationship. In the end, it's going to have a correlation, but you can have days of one outperforming the other, etc. So
absolutely, and this is where the dollar opened the year, right, almost at the lows here. And as you see, it did recover for a period of time, which makes sense because the dollar was really weakening across the board for almost 9 months. But then it weakened again. And in general, if you see, I mean, especially if you take out the first, let's say, 3 months of the year, afterwards, there is absolutely no trend in the dollar. I mean, it's just a very choppy trade, up and down. And what has been trapping people, and I know a lot of people that have been losing money with precious metals, is the fact that almost every move, lower or higher in the metals, has been quite strong. So very often people get confused and they believe that they're seeing some kind of an impulsive move coming through. They commit to the market, and then at some point, several days afterwards, that move stops, completely reverses, and then it accelerates towards the opposite direction until it does the same again and again. So in general, I think we have through the past several months, we've reiterated that with Grega plenty of times, that in general, if you're trading the precious metals, you should be aware that there is no medium to long-term trade at the moment, trend, I mean. So if you're expecting like very strong moves, for the time being, you have no indication that something like that is about to happen. Okay, so whenever you trade it, as I traded, for example, using, if you remember, I used the breakdown in silver from the triangle to trade both here, to trade both silver, but also to jump the gun on gold. And it was, you know, it was a good trade. It made me good money until I got stopped out with profit on the last remaining gold positions in my profit, because I had trailed my stop loss. And we got that happening once again. And you know something, one of the reasons I was willing to trail my stop and you know, get out with less profits is the fact because I've seen gold do that and silver do that plenty of times already in the year. I mean, if you see this move lower in silver, for example, that I'm showing in front of me, it looked extremely strong, right? Just look at the black candles. I mean, just look at the down days. It's one after the other, and you know, no respite whatsoever. And then suddenly, it reluctantly finds a bottom, and it starts moving higher without looking back. But that's not the first time that it has happened this year. So, you know, that's why you should always have in mind the bigger picture as well. Speaking of the silver and gold, by the way, keep in mind that silver is approaching a triple confluence of resistances. It's actually the 50 DMA. It's the 61.8 of that move lower. And it's also this horizontal support resistance area to the market several times. Other people call that a demand supply zone. You can call it whatever you want, but generally it's these levels around $16.70 is an area that there is a lot of buying and selling interest. So for people that like to scalp, I think the reward to risk ratio is quite appealing to try your luck for at least, you know, an initial rejection from there. For people that might have been long because they were looking for a bottom, I think that this is the area that you should at least consider taking half of. My personal viewpoint. Okay, since the beginning that we got that rebound in silver, I was quite lucky actually, because I closed all my silver shorts in almost at the very bottom, actually, at this daily candle here at the 7th of December. I said that I was looking for two zones in case we rebound to find resistance. One of them was the 1630 area, because we had the 38.2 there. We also had that low of actually the October low there, but that didn't prove enough to create any resistance. And the second one, which was more important because it's a triple confluence, is this one. So be rather careful here. At least an initial rejection from here, I would say, is a decently high probability. Okay, now let's have a look at a few DXY chart head and shoulders. Can you please give me a time frame? What kind of time frame are you looking for a head and shoulders formation in the DXY? The daily one. So you mean this being a head and shoulders formation? Yes, it's quite likely, but doesn't really change much, because still the do or die level remains, even if you want to see it as a neckline, the 9260 area. So yes, you can view this. Let me show you what he's showing. I've seen it, but you know, it doesn't really matter, because this is the same zone. It's this one. Okay, this one. So regardless, fact remains, 9260. Hi mate, I'm good, thank you. 9260 is the critical area. If we break below 9260, more or less, I think that from that point on, it's a given that, let me zoom out. It's a given that we're headed for a new low. At least in my mind, that's how it works. Okay. Let's view it on the weekly chart as well, because when you want to see longer term moves, the weekly chart is always the ideal one to do so. So once we break below there, you can see this as a weekly area of support resistance as well, by the way, here. So once we break below that zone, I think that at the very minimum, I would expect us to come find the confluence of this trend line that you see here and the 61.8 from the move that started in 2014, the move higher, the strong move higher in the dollar in 2014. But that's decently lower. It's at around, as you see, 88.50 in the DXY. Okay, so that's where I would be looking for the next area of support. Now, obviously, directly correlated to that, let's have a look at the euro. Whoop. Come here, there you go. Let's have a look at the euro. So the euro, first of all, held this 118.50 area. It actually more or less chopped around here for 3-4 days, and it's currently pushing higher from there. And the only other area of resistance I have is like just a few pips above. If we view this as a bull flag, you can see the parallel lines here, the intermittent red parallel lines. So if we view this as a bull flag, at the bull flag's resistance, a break above there for me confirms a push to new highs, which bodes very well with breaking below 92.60 in the DXY. So to be perfectly honest, even if we break above here, probably I would also be looking for the DXY to also break 92.60, and then I would not really need any more confirmation for something that I had been repeating over and over again, the move it ended up producing. That's why we had said here that even, I remember we were discussing with Dale, I said that I expect the euro to move, and that's my main case scenario. But even if it broke lower from there, as long as it held that zone, I would still be expecting this to be a rather more prolonged corrective move and eventually to be resolved to the upside anyhow. So I would remain bullish the euro USD in the medium to long term, even if we got rejected from there. Okay, and let's be honest, this is still a possibility because we are still in illiquid days, so we might see a little move higher. Everybody calling it a false break if it drops down below within the bull flag once again. Everybody perhaps trying to short it, then finding a support area somewhere above or at 114.50, and then pushing to new highs. But anyhow, my main case scenario remains that it's more likely that we're going to break directly from here than actually going once again lower towards 114.50 and then doing that. By the way, today's move in the euro USD and everything else is also being confirmed by the cable. The cable is so far breaking above the what potentially is a bull flag. But as I had said, for me, I would need a confirmation by seeing a daily close above 134.40 to 134.50, somewhere there. So if I see a daily close above there, I will also feel more comfortable that another leg higher is starting the cable as well. But anyhow, so far today we seem to be making a brave move towards that direction. Okay. So no complaints actually. FX seems to be moving today. I said several days ago, last week, I remember that in the short term, I discussed that with Grega when he was on actually. One of the two of the pairs that I had the highest conviction in having to do with the short term were the Aussie and the Kiwi. I strongly believe that the Aussie and the Kiwi, we were still in this area, retesting the 69.70 area in the Kiwi, and the Aussie was at the time in this triangle, in this little triangle that you see here. Let me draw it so I don't have to go down in lower time frames. So there we go. And the Aussie was in this little triangle. And I remember saying specifically that for me, I had the highest conviction in the Aussie and the Kiwi for the next short-term move that it would be higher no matter what. I honestly really believed it. The only reason I didn't trade it is because I made abundantly clear that it was the time of the year that I take off positions and not take on new positions, because I really don't want to be during illiquid markets leave my fate at the hands of speculators that for their own reasons.
The algos, Steve.
Yeah,
by the way, Tiho will be ready in 5 minutes if you want to wrap it up.
Sure. Okay. Sure, but we have some. Is it a problem if we take another 10 minutes? Because we do have some things to cover. It's up to you, Dale.
Okay. Okay.
It's up to you, mate. Whatever.
Go ahead.
Okay. Just let me briefly say here that the next resistance for the Aussie is the 50% fib, 78.13. The next resistance for the Kiwi is exactly here. Actually, it's the 38.2, but just a little bit above it at 0.71, we have the 200 DMA. So keep in mind that might act as also as the resistance. Now, actually, just look at it. It followed exactly the path we had drawn. I mean, even to the, okay, that was quite impressive, I have to say. So even if we break above there, we might eventually meet the confluence of the 50% fib and this descending channel. Okay, now let's just view it as a trend line. So far so good. I have to repeat that this has been a very nice recovery. I have no reason not to be bullish in the short term, even for further appreciation, but my main thesis remains that both the Aussie and the Kiwi are going to roll over sooner or later, okay, and resume to the downside once again. So I just want to distinguish that. Now, having to do with the USD NOK, keep in mind, key level here, we're currently testing, we've broken below this ascending wedge, so that's 1. 2, we're currently testing the ascending channel. If we break below that as well, for me, you know, that's confirmation that we're headed decently lower at least. USD SEK already has done the move. That gives me added confirmation. It has already broken the equivalent ascending trend line. So this looks good. I have a friend asking for crude. There is nothing that has changed in my view in crude. I had been very adamant that I was bullish and I was viewing this as a triangle. This has actually been proven to be the case. We have currently stalled at the 127% fib extension from this move lower. I do believe that we're going to head higher. The next resistance is the 61 area, which is the 161.8 of this move lower. But my ultimate target is the 63 level, which is the 161.8 of this move lower, the larger move lower, from the highs here in February 2017 to the lows that we had in June. Okay, so I still view it extremely likely that we're going to see even higher prices from here. Needless to say, I would not be buying so late in the bullish move. Okay, I just want to make that clear. Depends, of course, on what your time frame is. I'm just, you know, giving my personal viewpoint and nothing more, nothing less. Now, we also have friends asking again for the USD MXN. The USD MXN, as we said yesterday, nothing has changed. It still looks very, very good. I think that any pullbacks, if you get lucky enough, down to 1925, 1930, which is the breakout level of the cap and handle formation, is going to be godsend, most likely. Okay, next area of resistance, roughly 2020. Okay, let's see what else we have. So you can also start your interview. We have questions about Euro Aussie and Euro Kiwi. Sure, let's have a look at them. Let me see what else. Any views on treasuries? Yes, you can, Pedro. You can go to the ForexAnalytix channel on YouTube. Yesterday, we spoke about the treasuries quite extensively. You can find yesterday's webinar. We spoke about the treasuries quite extensively. Absolutely nothing has changed since yesterday. I mean, my view is exactly the same. So you're gonna have an easy time finding it because it's posted on YouTube. So you can browse right and left. You're gonna immediately see the treasuries. We spent some time on it, so you can see my view there. Okay, let's have a look at the Euro crosses since friends are asking for them, and then you can start your interview. Okay, Euro Aussie, still moving lower. I think this area, which is the ascending trend line that comes down from there, and the horizontal area at 152 and change, is going to be tough to crack. They might produce an initial, if you remember, even from when we broke below there, we were looking perhaps for a move all the way down there. I haven't changed any of the drawings. And then we also had the confirmation that it's moving lower. Why? Because we got a head and shoulders formation, a retest of the neckline, and the continuation lower. But I think that we are rather close to seeing a rebound, and then we have to decide based on the structure of the rebound if that is going to be a rebound that's going to lead to new highs, because don't forget that the medium-term uptrend has not been broken yet, or that will be a move that we will need to resell. I have to tell you, though, that I quite clearly see a 5-wave move lower, 1, 2, 3, 4, 5, which at the very minimum tells me that this is going to be A, move higher is going to be B, and another move lower is going to be C. So seeing a 5-wave move down very clearly, I have to admit that regardless of if we are going to end up having a change of trend, I will be looking to sell the next rally, then do the opposite. Okay, so I think that was quite clear as an explanation. Nothing much has changed about the Euro Kiwi as well. The critical area of support here is 168.680. Okay, and one more fast view in the pound Aussie and the pound Kiwi, because friends are asking for them. Pound Aussie currently testing this broken triangles trend line resistance, this time as support. Quite an important level. Let's see what's going to happen here. It's also 38.2, so currently sitting on critical support. Pound Kiwi, more or less the same, as long as it remains above this blue broken trend line. You know, we definitely don't have you know, a broken uptrend. On the other hand, I also see a 5-wave move lower here. So as I said yesterday, I would probably be looking to sell a rebound towards the 193, 194 area, then the opposite. But definitely, I think these are not good levels to be shorting them. Okay, so if you want to be short, wait for a rebound, then be short. Okay. Steve Ozzy again. Okay, guys and girls, this is the last question, so he can, so Dale can start the interview, and then the rest, of course, those of you in ForexAnalytix, you can find them in. We're going to start sending some updates now because some things are moving. Ozzy again, quite a strong rebound. I have to admit that I wasn't expecting such a strong rebound, but I think it's already fatigued. So first of all, if you zoom out, you're going to see that there is no clear trend, and that has not changed. Second of all, this is already a very strong rebound. Buying up here makes no sense in my mind. I would like to see what kind of a move lower we're going to get when we get the next move lower to decide exactly what we're seeing here. Okay, so for example, if we get rejected from here, which you very correctly say that it's a 61.8, and we find support, for example, here, okay, in this zone, which is going to be just a very shallow rebound, that's going to be a bullish signal for me. Okay, or if we find support here, and then we strongly rebound. So I have no high conviction in this. It definitely gave us a false break lower from this triangle. You see, it was a very, very long-term triangle, and it even seemed to be playing very nicely because it broke below it, it came back, it retested it, it got rejected, and then that looked like a very nicely confirmed bearish move. And then it just reversed and produced this move, which has already been like a, what is it, 330 pip move. Sorry, what the hell am I talking about? Yeah, it's 335, whatever, within, you know, just a few days, right? So let's see what happens from there. Let's see what happens from there. But definitely buying here makes no sense. It's not only that it's the 61.8. If you see, this is an area that has produced a low there, a high there. So, you know, it's an area of interest. It's an area of interest. And the RSI is already hitting overbought levels. So let's see what the next move lower is going to be. And we take it from there. But in the long term, if you see, there's no clear trend yet. So keep that in mind, that whatever kind of trade we end up taking here or viewing as a potential good trade, it will still not have a long-term direction in it. Okay, we need a lot more to get some kind of a resolution of what's happening here. Same here with the Kiwi yen. Kiwi yen is also at an important juncture. You can see here, because the Kiwi yen is currently testing the 61.8 as well at the exact same time, but it's also testing this broken trend line, long-term broken trend line from this triangle. So the Kiwi yen most probably in even more important resistance than the Aussie yen. Okay, so it's two pairs that's worth monitoring. Okay, thank you very much. Enjoy the interview, and we'll be here back tomorrow. And you know, if need be, I mean, if we start seeing more movements today, we'll restore the webinar back to being a 1 hour webinar before the interview, so we can have more time to talk about developments. Okay, Dale. Dale?
Thank you, Steve.
Okay, thank you, my friend. Enjoy the interview.
Okay, Tio, I'm going to make you a panelist. I'm not sure if you brought any charts. I'm going to be showing your blog, so looking forward to hearing your voice. Mine's a little bit deep with the upper respiratory infection, so here you go, Tio. Looking forward to talking to you. How are you, Tio? So you have to unmute yourself?
Yes, he's self-muted. He's not muted from our side.
Okay. So you have to.
Oh,
okay, hello?
There you go.
I apologize.
Okay.
Yeah, I clicked the right button. My voice is also deep, so maybe I should have stayed unmuted, actually.
No, it's great to hear you and nice to meet you, Tio. So really appreciate during this holiday period where a lot of people are just, you know, calling it a year until next week, that you would take the time to address our community. So thank you very much, buddy.
Not a problem at all.
Okay, so I'm
pleasure.
on your blog. I'm on your blog right here, and the first few words say that you're a successful trader. Let's start off with what do you trade, Tio?
Well, actually, maybe that's a little bit of a wrong word to use, but I have been a trader before. I'm actually an investor. I think a trader is somebody, let's say, who has more of a focus on short term, which is what I had in my 20s. Now being in my 30s, I'm more of an investor. So what I trade, what a wonderful question that is. I don't think there is an asset class that I haven't traded just yet. Maybe you want to ask me a few questions about that.
Okay, so that includes crypto. You've been involved in positioning in crypto?
Well, I think a lot of my followers don't know this, but I did buy a cryptocurrency called Ripple. I think it was in end of October, early November, and it was similar to what your previous guest, I think, was discussing. Even though his charts had so many lines, I couldn't understand half the things that were happening there. But I had a triangle on Ripple, and I ended up buying around 22 cents, and you know, it's gone up by 6 times. I've never seen movements like this before, and cryptocurrencies are, you know, very interesting. Usually my clients and the people that I work with don't have a lot of interest. I work with high net worth individuals, ultra high net worth individuals sometimes as well. They usually have their own structures.
What are their phone numbers?
Maybe the better question is, what are the phone numbers of their girlfriends?
Well, you know, I don't think you have any problem in that arena. So, you know, I think that it's interesting. You still are, you know, a young man, you know, 30s is, you know, you're in your heyday. and that you believe in being a global citizen. When I was your age, I would read guys like Harry Schultz and Doug Casey, and I still read Doug Casey, who's sitting on a mountaintop in Argentina.
Yes, I read
being prepared. Yeah, being prepared for some type of reset or unwind of the fractional banking system. Looking into 2018 with everything you see happening across the globe, what areas of the world are catching your eye and your attention? Let's go to your bailiwick and talk about different regions or countries.
Okay, so basically, to answer that question, I'm a huge fan of Southeast Asia. I actually have investments in Southeast Asia, in particular in Vietnam. I also have some structures in places like Hong Kong and Singapore for tax reasons. As you said, I'm a global citizen, so I heavily focus on offshore. I focus on citizenship. I have 4 passports, so I'm quite lucky in that regard as well. I've traveled over, I think, 85 countries now, and I've invested in real estate on 3 continents. To answer your question of before, what do I invest in? So mainly stocks, real estate in the form of REITs, as well as direct real estate. I've done commercial real estate on a smaller scale by buying certain parts of it with other co-investing. I've done luxury real estate and renovation, which is what my family specializes in for the last 25 years. And I invest in bonds, both government bonds and credit. I invest in gold. I invest in other form of raw materials, including MLPs, timber, forestry, agriculture, farmland. And I've also invested in private equity, venture capital, and I own a decent amount of collectibles, and so do my clients. So it's kind of like a family office kind of a portfolio, very diversified. We do equities, we do fixed income, we do commodities, we'll do alternative assets. Some of them are very liquid, so you can sell them in a minute, like your previous guest was talking about, which we don't really do. And some of them are also long-term bets where the capital is locked up for 3 to 5 years. Investments, for example.
Have there been any shift in any long-term bets based upon the quote-unquote sweeping tax legislation here out of the U.S.? And what do you make of it?
Not that much, actually. Tax-wise, I think what Donald Trump is trying to do, I'm not sure how much he's going to be able to achieve and whether his timing is right. I think the timing for the tax cuts is a little bit strange. But having said that, I'm always pro-tax cut. The timing, however, is a little bit off, in my opinion. If you're a student of history and you would look at the 1920s, the roaring bull market, and the valuations in the United States are now very similar to 1929 based on price to book, CAPE ratios, even much higher with the equities to GDP ratio. But Calvin Coolidge was the president. He famously, in 1928, was very optimistic, and he was constantly discussing the stock market. It reminds me of Donald Trump's Twitter today. And surprisingly, if you look at history, and I'm a huge student of history, that's how I get my analytics and analysis for most of the asset classes. Calvin Coolidge was actually a pro-business and a tax cutter.
Exactly.
So, yeah, so, and equities are very, very highly valued. So I wonder if history, as Mark Twain said, it doesn't repeat, but I wonder if it's going to rhyme here. And, we're up 9 years in a row. Last time we were up 9 years in a row was in 2000. And then we had 2000, 2001, and 2002 with down years in the tech crash. And the last time we were up 8 years in a row was during the roaring 20s. And 1929 was the first down year. So now we're up 9 years in a row as well. And, equities in America are looking very overvalued. And I think cutting taxes right here might push the economy to grow next year. I'm always pro tax cuts. I am more of a liberal person in a sense, and I believe that sales taxes, as we call it in Australia, where I'm from, GST, or in Europe, VAT, is probably a more smarter and efficient way for governments to run the tax.
It rewards savers.
Correct, exactly right. And,
all right.
And at the same time, I wanted to say as well that you know, my clients, majority of them being from Europe and Asia Pacific, they employ very, very expensive people, very intelligent people to find loopholes in whatever the government designs. So having a flat tax rate, I think, is a very, very smart, you know, policy to have as well. And I think having brackets like we do in the Western world, whether it's Australia, the UK, United States, and so forth, I just don't think it's very smart, because at the end it benefits the very wealthy, even though it benefits me too, because I work with these people, and the more money I make and save for them, the higher they pay me. But nonetheless, I'm an honest person, and I have to say that.
Did you have any investments in India when Modi went to a cashless type system by eliminating certain notes overnight?
No, I don't have any investments in India, and I didn't have any investments back then. I'm optimistic on India in the very long term. As a matter of fact, I'm optimistic on the whole monsoon region, as I would call it, and I spend a large amount of time there. If you look at the cities that are really booming and are going to boom in the next 5 to 10 years, and this was recently actually reported by Bloomberg, New Delhi is at the top, and the second fastest growing city in the whole region here where I am is Saigon, or Ho Chi Minh City. So I have investments in Ho Chi Minh City. India, however, is a bit of a mess for me, and very bureaucratic and difficult to do things for foreigners, in my opinion, unless you have the right partner. And I have the right partner in Vietnam. I don't have the right partnership in India yet, and I do play India with, let's say, publicly listed assets. And right now, the stock market in India is a little bit too expensive. It's at the same level as when it comes to price to earnings multiples, as we saw in the year 2000, 2007, okay, end of 2010, and today. And if you have a look at those charts, Dale, every single one of those years corresponds with some type of a meaningful top, or at least a sideways action for several years. So no, I don't want to own in India right now, actually.
And you said that, do you own gold as a hedge, or do you have some viewpoint as far as price potential? And, you know, most people would say, you know, maybe you have 5% in your portfolio in gold. Is that the way you look at it? And do you do it through mining shares, or tell people to take physical possession, or have it stored at a bank and hope the bank will let them in the door if they need it?
Very, very good question. I don't invest based on hedges. I believe if you need a hedge, at that point in time, you shouldn't have a position on, as Stanley Druckenmiller would say. So I like to own gold when it's in an uptrend, and gold is currently not in an uptrend. Having said that, gold is also paused being in a downtrend too, because the low that was made in December 2015 and the strong rally that we've had has been making higher lows. So we kind of have a consolidation and indecision in gold. At the moment, I don't own any gold, apart from the physical gold that my clients have stored in places like Cayman Islands and especially Singapore, where we work with a very good company that's not a bank. It's a German company, and they have an incredible safe. They have insurance policies, and they're incredibly cheap for storing gold. While some of the gold storage facilities charge up to 1% or 0.5%, the costs with these people are incredibly low. So physical gold that we have is an insurance policy we never touch, but as a part of a portfolio, we like to be in gold or silver, but especially gold, whenever it's trending upwards. So, you know, I better start watching more of your face webinars so I can know exactly when it's going to start trending upwards. So I better buy some.
How about a preferred currency for your clients to keep their holdings in? Aussie has gotten pretty cheap. Kiwi got very cheap recently. We've had a recovery. Or is it euro or the US dollar? That's our bailiwick. What's your outlook for currency, and what would be your recommendation for people to hold most of their currency in?
Sure. Well, I'm a longer-term investor, and that's the way that I run portfolios for my clients. We also measure performance in US dollars. Having said that, I only have one client in the United States, and you know, that's his predominant currency, obviously, or currency of choice. Otherwise, for the European clients, it's euros, and they would switch to US dollars and hold US dollars cash until I say to change over. Now, we've been holding United States dollars in particular since 2013. And for my Asia Pacific clients, we've been shorting Australian dollars since 2012. Now, people who have followed me for a while before my Atlas Investor website, I used to have a blog called Short Side of Long, and that's where I used to disclose all of my trades before I started working with some more higher end clients, and I had to be a bit more private. But I still hold that trade. So I'm still been short the Aussie. I think for 6 years, I haven't touched that trade. I don't even look at it every day. Now I've noticed.
What are you looking for? 60 cents, 50 cents?
I don't actually have targets. I wish I was smart enough to figure out how targets work. I've given it my best shot for many, many years. I've been trading. I'm 34. I've been trading for 16 years. I've never found anything that works with targets for me on a consistent basis. So what I'm looking for usually is what I notice that works the best is some kind of outright panic. So when everybody's panicking and giving up on the Aussie and every hedge fund is shorting it, usually I think I'm going to cover and I'm going to buy it, you know, and vice versa. So when I opened up a short on the Australian dollar,
how do you know that? By what you read in the news? How do you know that? Or by the percentage drop would tell you that? What tells you that people are panicking out and signs of capitulation?
Of course. Well, it's what my mentor used to teach me as selling climax. A selling climax is when it really becomes front page in the news, when you look at the commitment of traders data and there's huge amount of short contracts. When you talk to people in the actual country and they're shaking their heads at the losses that they've made and they're calling you up with the telephone and saying, get me out of my own currency, what do I diversify in? That's the time we're actually buying their currency.
Okay. All right. Yeah. So I have a selfish question. If I was considering relocating from the U.S. and you were advising me, where would you say to go?
Okay, so that question is very in-depth, and we will have to break it down based on what your goals in life were, what your age was, and which direction.
Okay.
So give me 3 different case scenarios, and we'll discuss it. Give me a young person, a middle-aged person with family, and an old retiree, for example.
Call me an old working guy.
Okay.
Do you have a classification for that? I'm not retired. I'm not retired.
You should never retire, as my father says. You should enjoy what you do, and you never have a day of work in your life.
Well, I don't know if you do retirement planning, but mine is to slump over on my keyboard.
Right. Well, you definitely love what you do then, Dale. That's excellent. That's great to hear.
All right,
so maybe,
let me ask you this. With all the damage done by the hurricanes in the Caribbean, do you see any opportunities in the Caribbean, or do you think they're done, especially places like the U.S. Virgin Islands and Puerto Rico, that there aren't opportunities because they're so burdened with debt and infrastructure issues? It could take decades for them to come back. Why don't we start there?
Well, that's a great question, and I have investments in Egypt, and Egypt sounds just like Puerto Rico, actually. I have a friend of mine right now in Egypt who tells me that the infrastructure is a total mess. The country has huge amounts of poverty. Nothing works properly there, and the stock market is down a whole lot. And I was quite smart to be able to buy Egyptian ETF and recommended it to my clients, and that's up some 30%. I think the drawdown on that stock market is something like 70% from an all-time high, and down 10 years in a row, basically. Obviously, some up years in between, but from 2007, it's straight down. So I think you should look at least at buying something that's totally depressed. And Puerto Rico is very interesting to me. There is a lot of contrarians now that I read that are kind of willing to go to Puerto Rico. They're thinking about lowering their taxes, especially their traders, people like Peter Schiff and John Paulson, who own big.
Well, they already have. They did that before the hurricane. to attract.
Yeah, well, timing is everything in this business, isn't it? And maybe I'm a big fan of Peter Schiff, but maybe his timing is not the best, though. Yeah, but having said that, you know, everything does eventually come back. The question is of timing. And I think if you look at some great busts throughout history, especially places like Russia in 1998, maybe Argentina in 2001, and Mexico in the 80s and so forth, the time to buy is when they default on the government debt. And that's where Puerto Rico is right now. I think we're just about there, or we've already done that. They can't meet those obligations. And you know, then the question is, of what do you buy? What has limited downside and potential upside? You know, is it real estate that you allocate to? Is it, you know, do you go and start a company down there? Do you go down there just for the sake of lowering your taxes? I'm not the biggest fan of Caribbean, because I just think that, generally speaking, Caribbean and Latin America don't have what it takes to become the next great country like United States has become, or British Empire before that, or the French Empire before that. If you look at all these, you know, we had the Spanish Empire, the Italian city-states. If you study history going back 500 years, 600 years, there's always been a dominant power that kind of controlled the reserve currency, and also, first of all, flexed its economic might, and then eventually its military might, and became the leading social and cultural force of the world. The United States is still it. And, you know, Virgin Islands, as you said, and Puerto Rico, they're kind of United States islands anyway. They might have different names, but this is United States territories. So where would I move if I was in my early 20s? Definitely towards Asia, definitely towards East, where demographics are very good. Places like Vietnam, like Laos, like Cambodia, Bangladesh, Myanmar, India. These are the places that are going to be booming. You know, I went to New Delhi about 6 years ago, and I can't believe, I recently went again, I can't believe how different it looks after 5 years. Whenever you go to New York or London or Paris, and I just came off, I have to tell you, I just came off a 5-month travel trip through Southern Europe and also Eastern Europe, visiting over 15 countries with my girlfriend. I've invested in actual real estate there as well in one of the countries. And I looked at a lot of prospects, a lot of deals. And I tell you, Europe and United States and Australia, majority of the time when 5 years pass by, they look very, very similar. So if I was very young, unfortunately, I'm not that young anymore, and I have a stable life now. But
yeah, you'd be going for emerging market countries.
Correct. That's the advice that I will give to very, very young people.
Okay. And when you're an old man like you at 34, what do you do then?
Older man? Well, I split my life very wonderfully between 3 continents. So I spent 6 months a year in my tax residency, and then I spent about 6 months a year traveling the world. And I predominantly mix pleasure and business, where business is I'm looking for opportunities, preferably direct investments and private investments, such as real estate, multifamily apartments to able to renovate them, or luxury real estate that's underpriced. And that takes a lot of time. So I spend time there, and then usually my girlfriend would enjoy herself. We would also have some fun, immerse ourselves in the culture. And that's the best way to do investing. I think that's the best way to learn about a place that you're visiting, to actually mingle with the locals.
On the ground.
On the ground, boots on the ground.
On the ground, boots on the ground, pressing the flesh, Kehoe, Birkin.
Yes, let me tell you how I did an investment in Eastern Europe. I'm not going to disclose the country where I did the investment, or the city, but basically I have 3 simple rules when it comes to investing in real estate. And this is not rocket science or anything like that. I'm looking, first of all, at a deal that's below market price. Very difficult to find in public markets. When the gentleman before was talking about the crosses between the euro and the US dollar and so forth, these are very efficient priced markets. They're ticking every second, and people are buying and selling them. In direct real estate or private real estate, I was able to find a deal where a developer had some issues with repaying his loan, and he was foreclosed through his renovation work on a beautiful building that's 150 years old in the center of an old city that dates back 600 years. And I was able to buy that property 25%. And also my client was too. We bought one apartment each. 25% below market value. Number two, another rule is that there has to be an ability to force appreciate a property. In other words, renovate it or improve it. So even if the price goes down and you put a little bit of money in, you can renovate it and increase its value. So there's an opportunity here for us to renovate the apartments completely. And number three, once you do that, you have the ability to gain some kind of cash flow, especially if you use leverage or debt or a mortgage to buy a property. You need cash flow to be able to service this and not to get into trouble. And I like 5% or higher gross rental yield. So I was able to achieve all these things. I purchased a property in a place that's the only European city out of all the major ones that's growing with tourism at double-digit rates. So there's a huge shortage of property happening there. Housing starts, and building permits are down since 2007. And basically, there's no building going on. At the same time, prices are rising because there's a huge amount of demand and growing population, and in particular, huge booming tourism. And to be able to buy a property at 25% below market price, ability to renovate it, and then later maybe use it on Airbnb, or maybe just do a long-term lease and improve your cash flow. These are the three rules that I look for when I do, I guess, private investing of that sort.
Should I guess Bucharest?
No, it's close, but not Bucharest. Bucharest doesn't grow. I don't think Bucharest is one of the top visiting cities in Europe. So maybe when I said that, I gave it away a little bit. I'll give you a hint. It's Prague.
That's a good hint.
Yes,
that's a good.
So basically,
be honest.
Doesn't like to go there because I've heard the most beautiful women in the world.
That's what I want to say. Be honest. Did the real estate opportunities or the women attract you there?
both of you are very, very funny. I can't disclose that because my girlfriend's the next door.
All right.
Okay.
Well, look,
so then you can disclose it. It's definitely the real estate if she's next door.
Correct. Exactly right.
Theo, really, I want to thank you for coming in and telling your story. I appreciate it. I'm glad I reached out to you on Twitter, and I don't think I have to wish you luck in 2018. I think you don't need a lot of luck. I think you've got the gift. But you have a great 2018.
I hope so. And thank you so much for inviting me on your show. I mean, there is so much that we can talk about, and maybe we can do it again because we only just scratched the surface. I mean, I'm so passionate about what I do, just as you guys are. And, an interview can go on for 3 or 4 hours. I mean, my clients really enjoy having me at dinner tables. I'm very good friends with all of my clients and good friends with their kids.
Family.
And I'm like,
they're like
exactly.
family.
Exactly. And we sit around and talk about the world for a long time.
Okay, well, then you're my trading warrior brother now, and I'm going to come to you if I think about leaving the States and looking for a low-tax place to live and trade from sometime in the middle of the year. So,
and don't forget as well, the key is beautiful women too. I've heard from both of you guys. So it's not just all about taxes and trading.
I'm married to one.
Okay, that's excellent. Merry Christmas and Happy New Year, gentlemen.
Happy New Year, Theo. Everyone could follow you at Theo Birken, B-R-K-A-N, and the website is, I see Jim Rogers is one of your heroes or mentors. The Atlas Investor, Theo Birken. Thank you so much. Theo.
Bye-bye.
Happy New Year, buddy. That's it. We'll see you tomorrow. Remember, don't just count your pips, count your blessings. Adios, my trading warrior brothers and sisters. See you tomorrow for Thankful Thursday. You're very welcome. You're welcome. Adios.